Good morning, Alex and friends. I'm Grace. Today is Sunday, April 13th, 2025, and you're listening to Alex's News. The weather in Riverside today will see a high of 77.2 degrees Fahrenheit and a low of 55.5 degrees. Coming up on the show, we'll explore the effects of new Chinese tariffs on American importers. We will also look into the reasons behind investors selling off traditionally safe U.S. bonds. Stay tuned for these stories and more on Alex's News. We begin this morning with major turbulence in the world of trade, specifically hitting U.S. importers who rely on Chinese goods. President Trump has dramatically increased tariffs, sending shockwaves through many sectors. Joining us now to break down this complex situation is our news reporter, Ethan. Ethan, just how high have these tariffs gone?
Grace, the numbers are quite staggering. According to reports from the Associated Press, carried by outlets like NPR News and Arab News, the effective tariff rate on a wide range of Chinese goods hit 145% around April 9th. This wasn't a slow climb in the final stages either.
145%? That is almost adding 1.5 times the product's cost just in taxes. How quickly did it escalate to that point?
It was incredibly rapid. NPR News reports that initial tariffs were already at 20%. But then they were quickly boosted to 54% before jumping to that final 145% level. I2S left businesses reeling, trying to figure out how to absorb such a massive, sudden cost increase. It seems the administration decided to really import some pressure.
I can only imagine. What are business owners saying about this potential impact? It sounds like it could be devastating.
Devastating is certainly the word some are using. Rick Woldenberg, the CEO of Learning Resources A, they make popular educational toys like Botley the Coding Robot A, described it bluntly to NPR News, calling it potentially the end of days for companies like his. He anticipates his company's annual tariff bill could explode from $2.3 million last year to over $100 million in 2025. Arab News and the Anchorage Daily News specifically cited $100.2 million. That's a crippling figure.
Over $100 million just in tariffs for one company. It highlights how reliant some American businesses are on Chinese manufacturing, doesn't it?
Absolutely. As NPR News points out, this crisis really lays bare a 4-decade-long dependence on inexpensive goods made in China. While it's true that Mexico and Canada have recently become the top overall sources for U.S. imports, China still dominates many specific categories. Perplexity API notes that goods hit by these new tariffs include things like educational toys, baby carriages, coloring books, holiday decorations, and even crucial components used in products assembled right here in the U.S.
So, beyond individual companies, what are the broader economic forecasts? This must have ripple effects.
Experts are warning of significant consequences. Multiple reports, including those from the Associated Press via NPR News and Anchorage Daily News, predict slower U.S. economic growth, higher prices for consumers, meaning more inflation, potential layoffs, and even product shortages. To put a number on it, economists at Yale University, cited by Perplexity API, estimate these tariffs could shave more than 1 percentage point off U.S. economic growth this year alone.
And it sounds like there is a lot of confusion adding to the stress.
That's a major factor. NPR News highlighted that the White House has apparently issued conflicting information about the rates, making planning almost impossible. This uncertainty is forcing tough choices. Isaac Larian, founder of MGA Entertainment A, Think Brats, and LOL Dolls, told Arab News he expects prices will have to go up for consumers. He's also, according to Perplexity API, actively looking to shift production to places like India and Vietnam. Similarly, Mark Rosenberg of The Edge Desk told Arab News he's hitting pause on China production plans.
Is shifting production out of China a simple solution, though?
It's far from easy, Grace. Rick Woldenberg stressed to NPR News how difficult it is to find manufacturers elsewhere, especially in the U.S., that can match the scale and specialized skills found in China. Plus, companies risk losing valuable tools and molds specific to their products that are currently in Chinese factories. And as NPR News and the Anchorage Daily News point out, even if they move, there's no guarantee they won't face tariffs in those new locations eventually. It's quite the simport-tach-ant challenge.
And China isn't just accepting this, right? What's their response been in this trade dispute?
No, it's definitely a two-way street, a real trade-off, you might say. Perplexity API reports indicate China has retaliated, increasing its own tariffs on U.S. imports to 125% and stating they'll ignore further U.S. hikes. While the specific goods hit by this latest Chinese tariff aren't detailed yet, Perplexity API notes that historically, China targets U.S. agricultural goods like soybeans and pork, energy resources, and industrial items.
So, a dramatic escalation with potentially severe consequences for businesses and consumers, fueled by ongoing trade tensions, and now, significant uncertainty. Ethan, thank you for walking us through that complex situation.
You're welcome, Grace.
Now, for our second story today, we're turning to the financial markets, where some unusual and, frankly, worrying activity has economists buzzing. U.S. Treasury bonds, typically seen as the bedrock of safe investments, experienced what's being called a, quote, freak sell-off. Joining us to unpack, this is our financial reporter, Chloe. Chloe, thanks for being here.
Happy to be here, Grace.
So, treasuries are usually where investors run times to asterisk when things get shaky, not times from. What exactly happened here?
That's right. Think of U.S. Treasury bonds, or treasuries, as loans you give to the U.S. government. They're considered incredibly safe. But as reported by outlets like the Atlanta Journal-Constitution, citing the Associated Press and WBAP News Radio, we saw significant selling pressure on these bonds late last week, even as the stock market was also looking unstable. Normally, stock trouble means bond buying, so this reversal is what's raising eyebrows.
A reversal indeed. And this sell-off had a tangible impact on bond yields, didn't it?
It certainly did. The yield on a bond is essentially the return or interest rate an investor gets. When lots of people sell bonds, the price goes down and the yield goes up to attract new buyers. According to the Denver Post, the yield on the key 10-year Treasury note jumped sharply, going from around 4.01% up to 4.58% at one point, before settling near 4.50%. What's really telling, as WBAP noted, is that even these higher interest payments weren't enough to stop the selling, indicating a deeper unease.
Deeper unease. What's driving that? What are analysts pointing to as the main culprit for this lack of confidence?
The dominant explanation, based on analyses from Perplexity API and reporting in the AJC and the Denver Post, centers on eroding investor confidence tied to the Trump administration's policies. Concerns about ongoing trade disputes, particularly with China, and the effects of tariffs seem to be key. The Denver Post highlighted that China has retaliated with tariffs up to 125% on some goods, and the average U.S. tariff has climbed from under 3% to about 20%. The AJC also mentioned worries over what they called erratic policy moves. Essentially, these actions are fueling fears of economic instability, making even U.S. debt seem less appealing, especially to foreign investors.
So it sounds like these trade policies might be costing us more than just higher prices at the store. What are the broader consequences if these bond yields stay high?
They could be quite significant, Grace. Rising Treasury yields act as a benchmark for borrowing costs across the entire economy, as noted by the AJC, WBAP, the Denver Post, and Perplexity API. For everyday people, this could mean higher interest rates on mortgages, car loans, and credit card debt, making borrowing more expensive. Businesses also face higher costs to finance their operations or expansion plans. And as Perplexity API analysis points out, sustained high yields could even pose risks to overall financial stability. Interestingly, they also noted gold prices have been climbing as investors look for other safe havens. It seems investors are looking for a new quote-quote standard away from treasuries.
Are there any other factors being considered, or is it all being laid at the feet of trade policy uncertainty?
While the policy concerns are dominant, analysts are looking at other possibilities. The AJC mentioned speculation about hedge fund activity, perhaps funds selling bonds to cover losses elsewhere. Perplexity API analyses also suggest technical market factors, like forced selling due to stock market drops triggering margin calls A, where brokers demand more funds from investors. Other technical ideas include rising inflation expectations, which make fixed bond payments less attractive, or shifts in Treasury supply and demand, though recent government auctions were apparently well received. Perplexity API also notes changes in how foreign central banks manage their reserves, like China reducing its U.S. debt holdings, could be part of longer-term strategies, not necessarily direct retaliation, which the AJC also deemed unlikely as a primary motive right now.
How has the administration responded to this market turbulence?
Treasury Secretary Scott Bessent, according to the AJC, tried to calm nerves, attributing the sell-off to normal market deleveraging. President Trump himself stated he had quickly solved the problem after announcing a 90-day pause on some tariffs. However, WBAP suggested the bond market's continued reaction indicates it wasn't entirely convinced by that pause.
It really underscores the power of the bond market. The AJC even recalled how market reactions impacted former UK Prime Minister Liz Truss and invoked James Carville's famous line about wanting to be reincarnated as the bond market because it's so influential.
Exactly. It's a potent force. And this isn't happening in isolation. The Denver Post reminds us this follows a recent dive in U.S. stocks, also linked to trade war fears and confusion over policy shifts. The big question now is whether this bond sell-off is just a temporary market tremor, or if it signals a more fundamental, worrying shift in how global investors view the U.S. economy's stability.
A critical question indeed. Chloe, thank you for breaking down this complex situation for us.
My pleasure, Grace.
Okay, here are some other headlines. In Washington, there's a significant push within the House of Representatives for proxy voting, specifically aimed at supporting new parents. Representatives Anna Paulina Luna and Brittany Pedersen, both new mothers themselves, are leading a bipartisan effort to allow members caring for newborns to vote remotely. Their resolution gained enough support to trigger a discharge petition, forcing consideration despite strong opposition from House Speaker Mike Johnson, who deems proxy voting unconstitutional. 9 Republicans joined Democrats to keep the petition alive, though its ultimate success against leadership resistance remains uncertain. This federal debate mirrors explorations in some state legislatures, like Wyoming, which are considering proxy voting rules, indicating a broader discussion about legislative flexibility and family needs. Turning to a legal dispute, a U.S. District Court judge has ordered the Trump administration to release federal funding for child nutrition programs in Maine. This temporary restraining order stems from a conflict that began earlier this year over Maine's policy allowing transgender athletes to compete in girls' and women's sports. The administration argued this violated Title IX and threatened to withhold funds, leading Maine to challenge the decision. While the court order restores the funding for now, it doesn't resolve the underlying disagreement about Title IX interpretation, and the case may be referred to the Department of Justice. With tax season considerations underway, there are specific tips for recently married couples and first-time parents. Newlyweds often benefit from filing jointly, which typically provides a higher standard deduction, a $30,000 for 2025A, and better access to credits. However, filing separately might be advantageous in certain situations. It's crucial to update names with Social Security and adjust W-4 forms. For new parents, obtaining a Social Security number for the child is key to claiming them as a dependent and accessing credits like the Child Tax Credit and the Child and Dependent Care Credit. Utilizing tax-advantaged accounts like FSAs and 529 plans is also recommended. In Wyoming, the legality of abortion remains contested. New legislative proposals aim to impose strict regulations on abortion clinics, potentially closing the state's only provider, and mandate transvaginal ultrasounds before medication abortions. These efforts proceed while the state Supreme Court prepares to review a lower court's decision that struck down existing abortion bans as unconstitutional under Wyoming's right to make healthcare decisions. A previously enacted trigger ban also remains blocked by injunction pending the High Court's ruling. Finally, President Trump underwent his annual physical exam yesterday at Walter Reed National Military Medical Center. The examination lasted nearly 5 hours and included cognitive testing. President Trump, now 78, stated he'd, quote, "did well," and achieved a perfect score on the cognitive assessment. This was his first major health check since sustaining a gunshot wound last July. The White House indicated a summary from the physician would be released soon, though historically Mr. Trump's health disclosures have faced scrutiny regarding their transparency. That's all we have for now. Today's episode was made by Alexander King with Claude Sonnet 3.7, Gemini Pro 2.5 Experimental, Gemini Flash 2.0, Perplexity Sonar Pro, and Google Cloud Text-to-Speech. I hope you have a great day. I'll see you tomorrow, Alex.